Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're doing well. Currently recording outside on a porch in Austin, so there's some birds and some nature in the background, and it is about to be 100 degrees, and I'll be dripping sweat in no time. So we're going to look at the dollar, gold, oil, and natural gas. Certainly attention has been on gold recently with all the volatility, with the equilibriums on the monthly time frame for these miners breaking bearish that we were keeping an eye on, and now the oversold bounce that's beginning to play out. So we're looking at the weekly time frames first because we want to know what the longer term trend is, and then we want to zoom in and know what to expect short term. So we still have a long-term uptrend just in terms of the last, let's say 8 months, 7-8 months on the dollar. Still higher lows on the weekly. We have pulled back significantly, there's no doubt about that, but it is very clearly still higher lows. So I would say anything above 94.08 is a higher low, and we're riding these exponential supports still, and the bulls are just fine. So until we change the weekly trend, we have to anticipate that any pullbacks on the daily time frame are short term, and any gold bounces are also short term. We're going to continue watching the correlation between the two. It's not always a directly inverse correlation, but that is the general way that it does play out. So the range of this pullback from the dollar high to the low, wherever this is, we have not set our low yet, not confidently. It's big enough that we can anticipate that when the bulls do bounce and try and maintain this weekly uptrend, that will probably form a lower high, and we could see a tightening weekly pattern heading into September and maybe even into October. So we could see volatility in gold and the dollar drop off a little bit if that does happen. Still need to see follow through on this weekly higher low for a bounce. So we look at the daily time frame. We tried to bounce right now, and it's going to be a key support test this coming week. 94.93 is the low of this pullback at this point, and the resistance level is 95.71. That's the most important range to me in the short term to be watching. If the bulls are able to recover, hold this level, and then see a bull break of 95.71, we'll say, okay, our weekly higher low has been set, and we're trying to resume the weekly uptrend. If we continue pulling back and we break 94.93, we're going to be looking at the weekly chart and say, all right, we have not established the higher low yet, and we're going to continue to watch that support level down here at 94.08 to see if the bulls can maintain that weekly uptrend. So going to be watching this tight range first thing, and then once this range breaks, we zoom back out to the weekly time frame and establish what our targets will be. Just looking at the 4-hour time frame, we can see that little bounce attempt lost the 4-hour higher low, so the bears do still have short-term control of the dollar. Checking in on gold. Gold oversold bounce on the weekly time frame is forming. If you are looking bearish on gold, you are getting ready once we see this RSI cool off and once we top out on this bounce. This weekly trend is not going to change anytime soon. In my opinion, the dollar bull trend is going to be lost before the weekly trend on gold is changed to bullish. So I think we're going to get a heads up on the dollar, and if the dollar loses the weekly uptrend, then we'll say, all right, maybe gold can turn this weekly trend around and see a more sustained bounce. But if that does not happen, we are just looking for a lower high on gold, because anything under 1265.82 is just a lower high. So we could see another $40 bounce and just set that weekly lower high. So it's currently an inside bar. The bulls did have some momentum into the end of the week. The daily time frame got the higher low and higher high that we were looking for. So the daily trend has changed, and that has now favored the bulls. And the next resistance level in the short term we're looking at is 1217.23, and then I would be looking at up here 1228.44. A couple resistance levels to be watching. The bulls now have a higher low pattern. The most important daily level is 1183.02 for the bulls to continue this move. If we lose the daily uptrend on this bounce, we can then say, okay, our weekly lower high has been set. We're still in a weekly downtrend, and we're looking for the bears to take back control. So that's why this daily uptrend is so important in the short term. Checking in on these miners. So these miners saw some nice follow through, played JNUG on this bounce, and we'll continue watching for opportunity. There's opportunity in both directions. There's really nice volatility. So we have the same kind of higher low and higher high, but note that it is a weaker close. We did not see the same strong close that gold did see. Gold does trade a little bit longer than these miners do once the bell rings at the end of Friday, but we are watching the bulls with the must-hold level of 1835. It's the same thing I just said. the weekly time frame is very clearly bearish, and we're going to bounce and set a lower high on this weekly time frame. There's no doubt about that, in my opinion. So we're going to be watching for entries into JDST and DUST, D-U-S-T. Those are both the bearish inverse ETFs for the mining sector. So we will look for when there are signals that the bounce has topped out, and one of the clear signals is going to be the daily time frame losing the uptrend. So we're going to continue to watch how long the bulls can hold the daily uptrend, but once it's lost, we're going to be looking for the weekly lower high to be set. So the bounce right now, 1835 is a must-hold support level. Resistance is 1922 and 1945 before we start looking at some of these gaps on the daily time frame for GDX. GDXJ, very, very similar. So at this point for GDXJ, we have the same setup where the weekly time frame is very likely to form a lower high. The bounce hasn't even really started yet. Inside bar, oversold bounce on the weekly is playing out. So the daily time frame, the must-hold support level is 2695, and resistance is 2855, 2879, and then again, we start looking at some of these gaps to fill. So we'll see if the bulls can keep this daily uptrend going as long as they can. The bulls are seeing the oversold bounce follow through, but again, when we lose the daily uptrend, we will say our weekly lower high has been set, and we'll look at JDST and DUST to regain some of that momentum. Oil on the daily time frame, also in a very interesting standpoint. I'm watching the possibility of a head and shoulders pattern, and I'm loving the setups that we have in these commodities because it's been a while since we've had the commodity space really showing a lot of clear setups, but we currently are in that place right now, so that's always a good thing. So we have a clear weekly higher low pattern that did get maintained, 63.62, and we bounced off of 64.45. So that's very clearly still a higher low, but we are watching the potential of this being a head and shoulders reversal pattern. With our left shoulder, the head, and if we bounce here instead of right shoulder, and then lose this neckline of support, that will be a loss of the weekly higher low pattern, and that will be the first time this weekly higher low pattern has been lost since June of 2017. So almost a year, actually, let's see, more than a year at this point, that we've had a clear weekly uptrend, and that would be lost. It would be a very clear bearish signal if that does follow through. So that is something we're keeping an eye on, looking at the daily time frame and getting rid of that ugly yellow. The daily time frame did break the lower highs, so we are starting a trend change on the daily, and we know that if we lose the daily uptrend, again, the weekly lower high will be set. We'll be looking at the potential of that being the right shoulder, and then we'll be looking back down at this must-hold support level of 64.45. Currently, the most important resistance levels are 69.29, and then another level up at 70.41. Those are the two levels that I'm watching, and if we can continue breaking those levels, then the odds, every resistance level on the daily that we break, the odds of it being a right shoulder will decrease a bit. So if the bulls can clearly break 70.41, I'll say that that right shoulder is less likely and that the bulls are more likely to maintain the weekly uptrend. And if we are unable to break this level and we start to fade back down, then we'll say that right shoulder is absolutely a possibility, and we could be looking for a reversal in trend. And we would be looking at DWT as a play, which is again the leveraged inverse ETF for the oil sector, and that's what we're watching. Natural gas, another beautiful setup. Equilibrium. So look at the past. We have our clear equilibrium that played out for months and months. High, low, huge V-shaped bounce, but unable to break resistance. Lower high, higher low, lower high. You get the idea. We're doing the same thing right now. So I've been watching for an entry in DGAS. Probably could have made that entry on Friday. I personally was traveling and flying, so I was not trading, but I probably would have entered on Friday, just at least an initial position in DGAS, again, the inverse ETF. We've got the high, the low. This is now our lower high, and we're going to look to pull back and form a higher low, I would say somewhere around the 280 level. So still need to see follow through. So whenever I see this bearish reversal candlestick on the weekly, I zoom in for more details. The daily time frame is still a higher low pattern, so I can say to myself, all right, if I'm a bear and I want to see this weekly equilibrium play out, we have to lose the daily higher low pattern. So I need to see a break of 2891 in order to say, all right, our weekly lower high has been set, and we're now fitting well into that equilibrium pattern. So it's all about 2891 support. If the bulls are able to maintain that level and turn around and break 2993, that will be notable, and it will show the bulls still have a lot of strength. But again, if we do break that level, we're going to look to pull back down towards about 280 or so, and we'll take it from there and look for this weekly equilibrium, just like we saw back in 2017, 2018. So that's where we stand, and there's a lot of opportunity out there in these markets right now. The raging bulls in the equities, we've got Canadian MJ on absolute fire. We've got these commodities now with some very nice clear setups. So wonderful time to be a trader, and we'll continue to keep an eye on it. Hope you have a good rest of your weekend.